Okay, good afternoon and welcome to our webinar, SBA Paycheck Protection Program Forgiveness. My name is Crystal Irons with the Missouri Small Business Development Center at Missouri State University. We are really excited to have all of you here on another webinar. Just real quickly, we're here to provide assistance to small business owners across the state of Missouri. And our center at Missouri State University serves 16 counties throughout the Southwest region. And through our funding from the SBA, we provide one-on-one business consulting at no fee to our clients. We also provide a variety of training programs like this one, designed to help business owners and managers successfully start and grow their businesses. And our webinar today will provide you an overview of the PPP loan forgiveness process and some guidelines. And of course, after this webinar, if you have any additional questions, please don't hesitate to contact us. Several of our consultants are even on this call today. We're always here to help you. You can quickly schedule a time to visit with any of us on our website at sbdc.missouristate.edu. So again, just let us know how we can assist you, of course, now during this pandemic, but even after as you recover and grow your businesses. We're excited to continue to work with you. We're pleased to partner with the U.S. Small Business Administration this morning to offer this webinar. I'd like to thank Mike McWhorter and Carolina Vargas, who are both on the call today with our Kansas City District Office, for taking time to share with us some more about the PPP loan forgiveness process. Mike's going to walk us through some information, and then we will have time for questions at the end. So please use the chat feature throughout, and we will get to as many of those questions as possible. We are recording this webinar, so we will send a follow-up email telling you where that is and any other additional information. And then know that at the end of this, we'll also be sending you a link to a survey. We love your feedback, and also any other ideas that you have for information that you need. We're happy to make that happen as well. So just give us that feedback. And with that, I'll introduce Mike McWhorter, who is our lead Lender Relations Specialist out of our Kansas City District Office. So Mike, take it away.
Well, thank you very much. I appreciate it. Hello, everyone. Again, I am Mike McWhorter of the Kansas City District Office here in Kansas City, Missouri. And on the phone with us is Carolina Vargas, who's a Lending Relations Specialist also. And I believe Sheila Forrester's on here with us, who's our EDS. I do want to reiterate one thing that Crystal said there. Please take the time at the end to do the survey, or when they send it to you. That way we can structure these events where we can get you more information that you need or something you're looking for. Without that information, we don't really know what to do exactly for you, and it helps us in planning these events. So I would encourage everyone to fill that out. With that said, today's program is going to be the Paycheck Protection Program application instructions. We're primarily going to go over the application form 3508EZ, and we'll also briefly touch the 3508. The reason is the EZ form should apply to probably close to 85 to 90% of you who have PPP loans, and we want to try to cover it as much as can. And today, this information you're looking at is as of September the 9th. I realize the thing says 8/31st, but there hadn't been any updates since then. But this is the most current and reliable source of information we have to provide to you as the SBA. So as everybody knows, this program started out was like an airplane flying. We took off the ground and started putting wings on it. So things change, and in the future, things can change again. So we're still waiting for Congress to figure out what they're going to do. With that, let's go ahead and look at. First of all, I want to go over is the forgiveness processing timeline. I think this is critical, so you'll have some kind of expectation of what you're looking at. Once you, as the borrower, complete the loan application, either the 3508 or the 3508EZ form, or the lender's equivalent, because some of the large lenders are having this online. You may not have a form at all. You may fill it out all online. So either way, once you fill that out in the lender, you submit it to the lender. The lender there in the middle has 60 days to make a decision and forward the decision to the SBA. They're either going to concur with you about a full forgiveness. Maybe you're applying for partial. They will concur with you and then forward that information to the SBA. They have 60 days. Then the SBA receives it. We have a total of 90 days for us to respond back to the lender and to you to let you know, the lender, of what we've made our decision. If we concur with y'all or agree with you on the 100% forgiveness, that'll be sent back to the lender, and then we'll make the pay off the loan plus interest, so you won't have anything left that you have to worry about. I will tell you, these days here, a lot of people look at that and get a little heartburn on it. And guys, it's just because we have so many applications, we don't know how fast these applications are going to come in. And we want to give you some realistic numbers. Now, from what I hear from my lenders currently out there in the field, that 60-day turnaround period is a lot less. We're talking a few days. And then the 90 days, we're tracking right now where it's probably going to be around 30 days. But 150 days is not unrealistic based on the number of loans we've done. So keep that in mind when you do the application. So I'm going to go into the application form 3508EZ that I said at the beginning. This application is based off of the Treasury Department, is who made this program available to use the SBA to facilitate it and to the small business owners. And what we did, we relied on our bankers to use them to get the money out there, because SBA only lends money directly to the consumer on disaster loans, and that's all we do. We do not do any other direct lending. So we used our network of lenders to get this out. On the easy form, they're going to have a instruction group with it. It's sort of like when you do your tax returns. You got your 1040 or 1040 EZ, and it comes with little instructions on how to fill it up. Same thing here. In the instructions, all you have to do is check at least one of the boxes at the very top of the instructions. And if you check one, then you qualify to fill out the easy form. Now, you don't have to submit the checklist with your form either. The first check box that you come to is going to be very simple. The bar is self-employed individual, independent contractor, sole proprietor who had no employees. If that's you, you check that box, you go over and you start filling out the easy form. That's all you have to check, one box. Box 2 is in there, and it's talking about the fact that you have employees now. Now we have employees. And the bar did not reduce the annual salary or hourly wages of employees by more than 25% during the covered period. This covered period alternative is payroll covered period. That's 8 weeks and 24. We're going to get more into that. But remember those words, covered period, because that's going to be big through the application, and you need to have a fairly good understanding of it. So we're looking here from January to March, their employees, that they did not reduce their income by more than 25%, with the max cap of 100 on anybody that makes over 100,000. We capped them at 100,000. So we're going to base those numbers off of what you'd had between January 1st and February 15th to look at the numbers that you're doing during the covered period. So that's the second box. So if you had 10 employees and you didn't reduce anybody's payroll, then you check that box and you're good to go with the easy form. The next question, if you look, I'm bouncing back and forth, looks the same, but this primarily deals with the fact of your employees, that you did not reduce your staff, okay? That you had the 25%, more than 25% during the covered period, wages again, and that you didn't reduce your staff any. So again, same basic deal. Only thing we're looking at is during the operation period here, the bar was unable to operate during the covered period at the same level of business activity as before February in the compliance, and that's based off of your Secretary of Human Health, Health and Human Services, Director of Center of Disease Control, which we know in this is down to mayors and counties here in Missouri. So if you were shut down because the county came out and mandated that all bars have to be closed, then you were closed during this period. You could check a box and go with that. So here on the application, this is the first page of the application. This is the very top of it. Now I screenshot this so you could see it, because if I put the whole page of the application, we'd have to get our glasses to look at it. So I blew this up. I put my own information in here just to give you an idea. But each one of these screens you go through is going to cover a section of the application. And I'll show you the full application at the end, but this is just for training purposes so you can see it. So on the very first part, top, you put your legal name or your DBA trade name. I highlighted up at the very top of this that you have to enter the same information you put on the application. Now that 2483 application form is what you filled out to get your PPP loan. If you don't have that information or you didn't keep a copy of that, the lender will happily give you a copy. But you want the name to be the same. If I filled out my business legal name on my application as Mike McWhorter instead of Michael, then I'd want Mike there. I don't want to change up anything. I want to mirror the form that I filled for my application to get the loan. The one key thing here I want to stress a lot on is your email address down here in the bottom part, right here where my little pointers are around. I hope y'all see that. But email address is so critical to us, ladies and gentlemen, because that's the best way to communicate with you. Again, you know, between the 11 million idle loans and the 5 million PPP loans, it's all our organization. That's all SBA. So we're somewhere around 16 million people or businesses we have to communicate with. It's impossible to call you. It's impossible. We email, so make sure your email address is correct. Double check it. Now we come to the second part of it. This is right underneath the name and everything. It says SBA PPP loan number. Again, I highlighted up there in yellow. If you don't have that information or that number, just contact your lender. They'll be happy to give it to you. At the end of the day, guys, the lenders are going to want you to get 100% forgiven because they get their money back that they lent you at the start of this program. This money we didn't SBA come out there and give McWhorter Bank and Trust $10 million to go lend. They lend their own money, and so they want you to be forgiven so they can get their money back. So the lender will help you on that. The PPP loan number goes next. Again, lender will help you there. Now, the PPP loan amount, this is the amount of money that you received when you close the loan. A lot of people use the word close. We use disbursement period money. So whatever you got put in your bank, that's the money that's going to go there, that total. Regardless what that number is, you're going to put that number in there. Then, what day did you close your loan or did you get the funds? In my example, I got them 4/15/2020. In my example, I had 3 employees working, and at the time of forgiveness, I had 3. I get asked this on a daily basis. Mike, I had 3 employees working for me, but Joe Billy Bob, one of my employees, he left, got married, moved down to Texas, and so I had to go out and hire another person. I got 3 again now. Is that okay? As long as you have the number you started with at the end of the thing and you didn't reduce anybody's wages by 25%, we're good. So don't get too far in the weeds there. Just what was your numbers there? A lot of you sole props, that'd be 1 and 1. You're just a sole prop, so it'd be 1. That'd be your number. Now comes the next part of it, just right underneath that information there. We're asking you for your idle advance amount. Now I'm gonna spend a little time on this because this creates some heartburn here. The advance, you can interchange that word for grant. Grant, advance, same thing. I refer to it as a grant a lot of times when I'm talking. What SBA did was after Trump declared the disaster in March, he came out and made a federal declaration of disaster. We, the SBA, implemented our disaster program just like for hurricanes and tornadoes. Like when Joplin was hit, I got to work that because I was working with disaster, assisting them. Anytime a disaster is in somewhere and it's declared a declaration of disaster, declaration declared, we come in and start working. So as soon as Trump declared the country a whole disaster, we started our idle program. When the Congress passed the CARES Act, March 27th, and it was signed by Trump, that changed up everything. And from there, we gave people $1,000 per employee on an advance. Just if you filled out an application, you had 3 employees, the SBA sent you $3,000. There's an idle application number, should have been in the email you received. We can help you get that too. So you've got your $3,000 there. Now, that is not your loan because some of you filled out applications, got loans. And loans could be $3,423, whatever, but you got loan papers to sign. This advance is that money just showed up. It just like Christmas, it came into your account and you're like, wow. and usually got an email because we were trying to get the money out so fast. The money from Treasury went to your account faster than we get you the email. So with that said, that's what they're talking about in that number. Now, you've got to put that number in there. It can't be some odd number because it was $1,000 for each employee. Back up on my sheet up here, I listed 3 employees at the bottom. I got $3,000. Now, if I'd received $4,000, that means I listed 4 employees on my application for my idle. Whatever it is, it's going to be round number to 1,000. So, and the max is going to be 10,000. You couldn't have got more than 10,000. The second part of this is very critical here, and I accidentally checked both boxes just to show you an example here. Bi-weekly, twice a month. My 3 employees, they get paid bi-weekly. I pay myself twice a month. Which one should I check? Okay, in that scenario, go over and check other, and then just put in there, you know, my wage earners or my hourly employees get paid weekly, for example, and I get paid once a month, or I get paid twice a month. You're going to use that. But if everybody gets paid bi-weekly, or everybody gets paid twice a month, or monthly, or weekly, just check that box and move on. But if you have a combination of stuff going on there, check other. I just use that for example there. You want to just check one, but to show and show you what I was talking about, because that's a real thing there with people who are self-employed. Now we're going to come to the covered period. I told you that was a critical word, and we're going to beat it to death like a horse and dig it up and beat it some more probably. The cover period is either going to be 24 weeks, 168 days, and that period is going to begin from the date of disbursement, or the borrower receives a PPP loan before June 5th, the borrower may elect to use 8-week cover period. Now that's critical there, that June 5th number. If you got a loan in April or May, you can pick the 8-week period. If I got a loan June 6th, I can't pick the 8-week period. I have to go 24-week period. That's the whole thing there. Now on my example down here at the bottom, I put covered period, and I did the alternative cover period. I put both numbers in there. You obviously won't have that. You're just going to have one. But I did that to show you an example, and also to show you how things change. When I put this in here, I put that my cover period was 4/15 to 7/8, which is the 8-week period. So that would be corresponding if I had a loan before June 5th. After June 5th, or if I want to opt for the 24-week, I put 4/15/2/20 to 8/12. The reason I put that in there is because this is the confusing spot here. A lot of people don't need 24 weeks to deplete their funds. They need maybe 10 weeks or 12 weeks. When Congress passed the Flex Act, which was June 5th, when it was signed into law by President, they passed it, President signed it. On June 5th, that right there, that stopped everything. And we said, no more 8 weeks, we're gonna go 24 weeks because people were having trouble spending the funds during the 8-week period because maybe they were shut down, maybe they didn't have as much expenses, yada, 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 whatever it was. So I put what my exact time was there, and that's about 10 weeks. Since that, here's the alternative period. So the alternative period is for loans, again, made after June 5th, or loans that were made prior and the borrower wants to opt for the 24-week period or 168 days. And I wanted to show you down here at the bottom of this, my example of being dispersed on 4/30, 24 weeks within October 15, 2020. So on this, I'm gonna back up just a little bit. So right here, it'd be 4/30 on my alternative payroll, be 4/30 to 10/15 would be there. That's what you have to put in there, whether you're turning the loan in today for forgiveness or whatever. Because if you notice, the 24-week period will allow you to spend the money. If it takes 12 weeks, 14 weeks, whatever, you can go ahead and apply for forgiveness after you deplete the funds on that. And to answer that, right here's my question. May a borrower submit forgiveness application before the end of the covered period? Answer, yes. The borrower can do it. The only caveat to that is if you had a reduction in salaries more than 25%, then you must account for the reduction for the full covered period. That is the only thing that stops you from putting it in. You have to address it. But assuming the borrower has a 24-week cover period and they're ready to submit forgiveness application at the end of 10 weeks, the borrower reduced an employee's pay by 25% and their salary 150, the borrower would have to report the total reduction on the 2,400 over the 25 weeks. But if you didn't do that, you go ahead and pay it, you go ahead and apply it, and you wouldn't have to count up. You'd be good to go. So I hope this straightens some stuff out. This number here in the application, I'm touching my screen like y'all can see me. I know you can't, but the alternative payroll covered period has to be 156 day or 168 days from the date of disbursement to the end. And the reason is because our lenders have to put this information into the portal of SBA, and the portal can only determine the 8-week period because the number of days, 56 days, and the 168. If you do like I've done there, it's going to reject it and say there's an error. So you got to pull the full 168 days. Whether you're turned in now or not, doesn't matter. You can deplete your funds and use it. I hope that straightened out. It's been very controversial for our lenders. It's been very controversial for a lot of people trying to fill out the application. Again, you can do the application. Once you deplete the funds, you can apply. You're good to go. You just got to put that number in there. So today you'd be signing it, but it might not expire till October. That's fine. That's just a number for our system to know which one you're under. Let's get into the good part of it, the meat and potatoes now. I got to move a little quicker. So on payroll costs, we're talking about what did you pay in wages? How much wages did you pay out to me and my 3 employees? I paid $38,700. The business mortgage insurance. I hear this all the time. Mike, I work out of my home and I deduct my home on my taxes, part of my house, like 200 square feet. I got dedicated to my business and I get to deduct that on my taxes. Great. Business mortgage insurance is not your primary residence. We are not counting it. That's a line drawn in the sand. We're not going across it. That business mortgage insurance is for commercial property that you operate your business out of. You can deduct only the interest, not the full payment. It's only the interest. That's where that goes there. So if you had a business operating out of a house, but you had a warehouse that you stored your equipment in, the warehouse, you could deduct the interest, but you cannot deduct anything for your primary business or home. Business rent and lease payments. Basically what it means, if you rent a place to operate your business out of, I got a storefront, you can deduct those rent payments. The caveat here is you had to have this in place before February 15th. So if I went down and signed a lease agreement to rent a spot in May, I can't deduct that. It had to be in place before February 15th, 2020. So business rental and lease payments. Now lease payments, if my business was a carpet cleaning business and I had vans that I had on leases from Ford Motor Company, and those 3 employees drove those 3 vans and I drive one, your lease payments on that equipment can be deducted. The full lease payment can be deducted. So if you lease equipment, you can deduct that. Anything that facilitates your employees from so that they can perform their task and work. That's what you're looking at. Business utility right here, line 4, there's a lot of confusion on this because it says transportation. A lot of people says, well, I can deduct my car payments. No, transportation is based on the utility. Congress enacted a 1981 law or something like that. A lot of states allow it. Your utility companies, primary electric companies, are allowed to charge a transportation cost on your bill. It's sort of like my cell phone bill. I got all kinds of fees all over the place. If you look at your utility bill, you have taxes, state, local, just everything. And some of them you will find they have a transportation fee. That's just saying that your utility bill for me and you is, if I pay $480 a month in electric bill, I can deduct $488 out of this deal. You can deduct your whole electric. You can deduct, you can count water, waste like garbage and sewer, whatever. You can deduct a cell phone that's business. Now you can't deduct your personal cell phone. Again, too, you can't deduct your house utilities. Your house utilities do not count. your primary house or your apartment you live in, whatever, you cannot deduct those. So this has to be for your business operation. So you'd have to have a storefront or something you're paying utilities on for that. But you can deduct those fees. Second part of the thing is lines 5 through 8. Line 5 is easy. You just add up lines 1 through 4. Now that number came out to me to be 45,000, which was the same number of my loan amount. That number can be 46,000. It can be 47,000. It can be 44,000. Whatever it is going to be what it is. But you enter that number there. Number 6 is the amount of my PPP loan. Again, what money did the bank give me? How much money did they give me to put in my bank? Mine's 45,000. Number 7, the reason I have this highlighted is it's another stickler there. The payroll cost is divided by 60%, not multiplied. I had 38,700 divided by 60 gives me 64,500. That means I spent in excess of 60% of my total PPP loan in salary. When this program was started, it had a 75% you had to use for wages. Now it's 60% you have to use for wages. But the intent of the CARES Act was to pay your wages for your employees for a period of 8 weeks. That was the intent of the bill. And then all this other fees got added in there that you can deduct expenses associated with your wages. But if you spend more than 60%, that's great. 60% is your minimum that you can spend. And line 8's pretty simple there. What's the smallest number? 45,000. So here it is all laid out, and you can just take a gander at it. The 38,700 divided by, I'm sorry, I got a cricket in my neck here. You take 38,700 divided by 60 is 64,500. If you multiplied that number, it'd be a whole lot less. So you want to divide, not multiply. I want to show you real quick. This is the application we just went through. Here's the page. That's it. The little check box there that you see in the middle for 2 million is yes, people who have loans over 2 million can use the easy form. If they didn't reduce their employees, they didn't, reduce their wages, they can do this form. This form is not for 2 million and less. The money dollar matter does not matter in this, the dollar amount. But if you did do over 2 million, you got to check that box. Again, you're seeing the highlight. This is just what I took screenshots of. Page 2. This is the second page of your application you must complete. You initial the boxes over on the side, and you do it, you initial them, and you sign it. The one key thing I want to point out here, if you're a sole prop, you have to sign the forgiveness application because you signed the application to get the loan. If you're a business and you have partners, then in our case right now, say Carolina and I had a business together. Carolina signed the PPP application to get us a loan. She went to Columbia back home to visit family, and I fill out the application for forgiveness. I can sign it because all it's saying is the signature is authorized representative of the borrower. So we're partners, 50-50. I'm a representative. That's the only thing required there. So if you have a business with a partnership or several members in LLC or stock options on a corp that you have stock people buy part of the stock, all that's required is they have to represent the borrower. So if you have that, anybody can sign it that's an authorized representative of the business. But if you're a sole prop, you're going to be signing both of them. And page 3, it talks about demographics. That's there. If you want to complete that, you can. If you don't, that's fine. I like to suggest that you do complete it because it makes it easier for us to be able to go back to Congress and say what the money was used for, who used it, who received the funds. It cuts down on a lot of this sometimes nonsense about we did or didn't lend money to certain groups or people. So if you have the opportunity, we would definitely appreciate you do it. But you don't have to do the form if you don't want to. On the 3508, the long form, due to time, I just wanted to show you here. It basically looks like the application you just did, except you notice we went from lines 1 through 11 because now we have Schedule A's and stuff to deal with. Here's what the calculations look like on it. And I was a little bigger company. I had $188,688 in wages on that for my payroll costs. And I want to reiterate, whether it's on this form or the other one, payroll cost is your wages, anything associated with that. So if I withheld taxes and all that, that can be put in that line. Here again, I didn't have any mortgage interest, but I had business rent. I had utility payments. I again come down here because of Schedule A, you got to do your FTEs, which is full-time equivalent employees. This will be for another time, another PowerPoint to get into that. But I want to reiterate another thing here too. The SBDC is a great resource to help you with this. This application is not that complicated. Sometimes people like to have a second set of eyes look at it. I strongly suggest you reach out to the SBDC there in Springfield. They're going to be able to help you and look at it and go, whoops, Mike, you made a mistake right here. And then we'll be able to correct it before we give it to the lender and get it started the process. But this is the process. The numbers come off of it. And I'm going to turn it over to questions. I'm sorry I ran a little long today, but I was in a mood to talk. But I'll start taking questions, Crystal, and see what we got.
Okay, so as you have questions, throw those into the chat. Let's see, Mike, what if your cell phone number is your business phone number? Would that apply on the utility costs?
Yeah, if you're a sole prop out there, I'd be a little hesitant because they drew such a hard line in the sand about primary residence. But I understand that nowadays we're in a little different world. People have a cell phone, no home number, and they use that primary for business. It's not going to be that big of an expense, and I'd probably be okay with that if I was a lender. I don't see that being a big problem. Again, if you're talking about a sole prop or something like that, just spend the money. You're going to show the money spent to yourself. And what I'm saying is a sole prop, you're being paid off your net income from Schedule C or Schedule F if you're a rancher or a farmer. You're being paid that. So that money's going to go to you. You shouldn't even have to worry about it because all the money went to you. And you shouldn't really have to worry about expenses too much unless you have a storefront or something. But all that wages can be spent on you 100%. But on a cell phone that you do use in your business and you can show it, I'd be okay with that.
Okay, let's see here. If we are using the 24-week period, do we enter that in the alternative covered period? What do we put in that covered period blank?
You use, and that's what I was trying to show. That's where you took a little while today. You want to use the 24-week period. In my example, I think it was October 15th. So if I was filling that out and got my money on the 30th of April, that number would be April 30th, and October 15th would be that alternative 24-week period. You put that number in. Now I'm using my funds. Obviously, if I'm filling it out today, I've used my funds well in advance of the 24-week period. And that's okay. That's what I wanted to convey to y'all. That's fine. I could still apply. That number just needs to be in there for our system to be able to say they used the 24-week period. And if your loan was done after June 5th, you're automatically going to be that 24-week period. You have to put that number in. Is my example. I said I put both numbers there. You won't be putting both numbers there. I just put them in there to show you where they correspondingly go.
All right. If we have used all the funds but are still not allowed to apply yet with our bank, do we need to keep calculating and gathering documents beyond our funds used date?
No, you're fine. Once it, in my example, 45,000. When I get to where I've spent $45,001, I'm good as long as I can document it, show it. I'm okay. The reason I'm saying it could be a little over that in some cases is I know some people have spent. Take my example, the 45,000 have spent, you know, their rent or lease payment on their building or, you know, their store frontage is say $2,500 a month, and they did it for 3 months. That's $7,500 they just put in there, but they only needed maybe 7,000 to cover the whole amount. It's okay, put 75 because that's what you've spent out, and do it. But as soon as you deplete your funds, you're good to go. You don't have to continue keeping your receipts on what you're spending because that's all you got to justify. and you certify and use those funds for the eligible wages and costs they're associated with. So.
Okay. Let's see here. If you choose the 24-week period, but expend the PPP funds in less time, what do you use as the cutoff date you use for payroll?
Okay, whatever that date is, and I understand the confusion a little bit on that. So again, we'll go back to my example of 4:15 to 4:30 to 10:15. If I'm doing it today, and today is September 9th, my cutoff period, let's say my employees get paid this Friday. So this Friday would be my cutoff date, and I'm going to be done with it. So that's when I'm going to pay there. So your cutoff date is going to be when you pay the funds completely out during that 24-week period. Now, if I need my rent that's due the 15th, but I've already paid all my wages and I've already allocated that money to go to my rent, and my rent's going to be paid the 15th of September, then the 15th would be my date of when I paid everything, because I'm still within my 24-month period.
Okay. If we have a fleet of trucks, can the gas costs used in the course of business be considered a utility?
Yes, and be cost of, most times those are on fleet credit cards. And as long as it's like that and you can verify and show it, yes, you can show that, because your fleet vehicles have to take your employees to and from work, or maybe you have a limousine service. You could have that, and that would be part of the cost of operating. So yes, that would be eligible. The gasoline to work or from home to work, no, does not count it.
Okay. Are bond interests paid for bonds used to purchase buildings, do they qualify as mortgage interest?
No, probably not. That's one you need to send an email to Crystal, and we'll try to research it. That's a weird animal. That's one we don't get very often.
Okay. Let's see. If we have someone that's 100% commission and it is their income from January 1st to March 31st, what is the deadlines for applications to be submitted?
March 31st to January 31st.
January 1st to March 31st.
Okay. So they're getting paid commissions from January to March. And so they applied for a PPP, and April 3rd was the opening of the PPP. So they applied for a PPP, and the people won't get paid again until January to March. Not real sure.
We might need some more information on that one.
Yeah, I'm gonna go with that. Also, back to that bond real quick. I just thought a little bit in my mind. If you're using bonds to buy commercial property and flip it and do that, then that's not really associated with your wages of having an open shop, as the intent of the law was really designed for. Is you have a place of business that you're operating out of. If you're buying on bonds and you're flipping the properties, then I'm gonna go with a strong no on the interest on that.
Okay. So what if somebody has an employee who asked for reduced hours, which brings their wages below that 25% reduction? Would that be forgiven? And then could they use that easy form?
If it drops it below the 25, you got to go to the long form. Okay. Now, when you're paying their salaries and stuff, now you can pay bonuses and overtime and stuff like that. But whatever you spent for that employee from January to February, whatever their wage was. So, and I'm just going to use simple numbers here, guys. I'm paying Joe Billy Bob $20 an hour, part of my crew. He comes in and says, you know, Mike, I don't work 8 hours a day. I just want to work 6 hours a day. Well, now I'm getting real close to it, because 8 hours would have been $200 a day. I mean, $20 an hour would have been $160, and 6 hours is $120. So now I'm getting real close to my 25% on that. I could be the kind of thing where I pay Joe Billy Bob a little overtime because I say, okay, you can do that Monday through Friday, but I'm going to need you to work, maybe the weekends or something like that. But if you're over 25% on the reduction, you got to go to the long form, and that's where they get into the full-time employees, and you got to have those counts. And like I said, those are a little bit more complicated, and that'd be for a different day. But also, again, that's something you're going to need to really reach out and get some help on that.
So if we have an LLC and this person takes an owner draw instead of a paycheck, do they include that amount under the wages section?
Yes, and you can be a sole prop and be an LLC or a corporation. And in that case, again, that's all your money. But if you're a LLC, like in my example, I was an LLC and had a DBA. If I take a draw at the end of the year, based off of the profit. Now, I know that my own personal experience is when I had my Schedule C reporting my LLC income and stuff for my business ended up was I had to go back through the year and go, I got my Ford pickup truck payment due today. I gotta write some money out of my business account transfers what I did, transferred over to my personal account so I could pay the business or my personal truck payment. I took the money out of the business account, put it in my account. So I never really paid myself a per day or monthly. So if you're somebody like that, and you take just a draw at the end of the year, you take the profit off the end of the year, you're going to divide back by 12 and see what you're doing. But if you're a sole prop, again, all you're going to need is that bank account where the money went in, and then take and show the money going to your personal account. And that can be one check, it can be 2 checks, 15 checks. Whatever it took to get that money over your personal account. We don't have to see the money spent in your personal account. You don't have to document that because you got to think about a wage earner. As I sit here and work right now, I get a paycheck every 2 weeks. A lot of that money, it seems like it goes out the door faster. But anyway, a lot of that money I can put in a savings account. It doesn't matter what I do because once I got paid, it's my money. Same thing for a sole prop. Once you pay yourself, if you want to go donate that money to the Red Cross, whatever, that's up to you. You do not have to document you spending the money on rent, housing expense, buying groceries. You don't have to show any of that. All you got to do is show the money coming from your business account to your personal account. And I'll expand. If all you have is a personal account that you operate your business out of, shame on you, you shouldn't. You shouldn't have your money commingled like that. But if you do, all you got to do is show the money coming into your account, and then I would give the bank, which I've been telling the bankers, collect 2 months of bank statement to show the individual spending money. Because there's no way once the money becomes commingled that we can say, well, we gave you, and remember on sole prop, the most you could have got was around $20,388, or after June 5th was probably around $15,385. The reason for the difference there is because when we first came out, was giving you 2.5 months of your net income that you made, the net income on your bottom C, we give you 2.5 months. A lot of people don't have expenses that are sold props that fit into the expense category. So after June 5th, they limit you to 8 weeks. So you took your net divided by 52, multiplied by 8, and that was the money they gave you. Unless you did have expenses, then they go. So most of your sold props are going to be under $15,000. So all they got to do is show the money going into their account, 2 months bank statements, and move right along.
We have a couple of questions about basically, I guess, a suggestion of, should people wait to apply for forgiveness since there is a lot of talk about Congress considering additional PPP legislation? Have you visited with lenders about what they're sharing?
Yes, a lot of lenders have relayed back to Carolina and myself that they're waiting to see what Congress does because they understand, just like you do, they watch the news, they hear the stuff, you see Marco Rubio on TV, Mitch McConnell, whoever, Adam Schiff. They see him out there telling about, we're going to do 150,000 just blanket forgiveness. Okay. If that happens, then so be it. There's nothing we can do. As I said here today, what I'm telling you is what is law and policy that we can do right now. If they do come out with that, there's still going to be an application to it. And I think the majority of the people that be affected are not going to be your small business owners, because basically if you're a small business and you have 3 employees, you're still going to be well with under like $50,000 loan. And those are so easy that they should fill out the application and get it done, because it's not that hard to document. So a lot of lenders are not accepting applications yet. I think one of the questions earlier, or someone asked, may have been another PowerPoint, but what if my lender's not accepting applications? Talk to them. They're probably going to tell you the same thing. Some of them are trying to get their system set up where they can handle the loans, but more than likely, the majority, if you're under 150, they're saying, hold on, because Congress may give a blanket forgiveness and you don't have to go through the process and all the hoops. If that's the case, then go along with them and ask them when they are going to accept the applications. And then again, they're going to be more willing to help you and all that.
So we've got another question about the fleet. If they use their vehicle for sales calls, is that considered utility expense?
Well, if you've got a fleet of vehicles and they're using those for your sales calls, you can take if the fleet, you should be mostly on that, should be leased, but if you're making payments on it, then you can deduct the interest on it. But the lease payments, if you're leasing all those vehicles, you can deduct the lease on those vehicles during that covered period. The thing is, again, I want to stress to everybody, because this has been the most confusing. You do not have to spend 40% of the PPP loan for cost. You can spend it for wages. And if you got 2.5 times your salaries when you first applied for the loan, then you should be able to spend in excess of 60% for wages, what you should be spending. But we allow you to go as low as 60%. So if I can spend my wages, and some businesses right now have seen an influx and overtime and stuff like that, because their business has been impacted, but they're still working and they're trying to provide services for people, like a delivery service or a restaurant doing carry out. Their program or their business model changed, and now they're delivering and they're paying some people to do that. So try to use the money as much as possible for wages. And if you've got to find avenues for cost, then that's when you're going to need to reach out to the SBDC for help and guidance on how to look at what some costs would be eligible. But when you start getting off in the gray areas, we need to get down and look at what we're actually going to. This is more of a general guideline for you to be able to look at. So if you have a fleet of vehicles, I'm well within saying, yes, the lease payment can be deducted. The fuel cost associated with them on your fleet card can be deducted. So you got to watch where you're going to on that. And then are we spending the money where we can on wages? And if we can justify it on wages, then we're so much better down the road.
If someone now applies for an EIDL grant and already has a PPP, would they have to pay back the grant, or are these separate?
They're separate, and unfortunately the grant has already closed. We're out of money. That was a $130 billion little pocket of money that they gave out, dispersed up to 10,000 people till they ran out. That money, if you noticed in my deal, we put it on the application on page 1, your EIDL grant advance, same thing. That money will be deducted at this time, will be deducted from your forgiveness amount. You didn't put it in the calculations, and you don't put it in the calculations, because the calculations was based off of what you used your PPP loan for. Again, it is currently a loan, and it will become grant money when they forgive it. When that happens, you can't get 2 grants for the same purpose. Is what happens there. So right now, as we sit here today, September 9th, unless Congress changes that, because it's in the act, the CARES Act, it's in there. Unless they want to change the law, which that was the law, then they can come back and change it and address that. And that again is why a lot of people under 150 a lot of lenders are waiting to see what they do, because let's face it, and I've dealt with them, people that got $2.5 million loan got 10,000 in grant money. That has no drop in the bucket to them. They can pay that, next day. It doesn't matter. The people it's going to affect is like the 3 or 4 employees, a business owner that has those and has money. Now they're going to have a balance left on their PPP, which is a loan, which will have to be repaid at 1% interest. And they did change that to a 5-year term. So the 5 years is from the date you were dispersed, and you have to have it paid off, and it has to be amortized out and all that. Not a bad deal. I don't know anybody can go out and get 1% money, so it's not bad. But right now, currently, we SBA will deduct that $3,000 from your calculations. You don't do it. We do it. And they did that, I think, to give them a little breathing room there in case Congress changes their mind and says it's not going to be applicable.
Is the forgiveness amount going to be counted as income for tax purposes? And if not, are we able to use the expenses paid as a tax deduction?
I'm sorry, read that again.
Is the forgiveness amount going to be counted as income for tax purposes? And if not, are we going to be able to use expenses paid as a tax deduction?
That question has been thrown out a lot back there about that, and I want to make sure I was hearing it right. There's several different theories on that. I'm not an IRS person, nor am I an IRS official, nor am I going to presume to be one. It makes sense that you can't deduct expenses that we gave you money for. To me, in a common sense, and I'm all about common sense on some of this, it makes no sense that we'd allow you to deduct that money from the IRS, since the Treasury, again, is the one to put this program together. So they gave the money, and then they're taxing you, obviously. They tax all of us. But I can't see them saying, oh, yeah, you can still deduct those expenses that we gave you money for. So that part I don't see happening. As it sits right now, I do not know of any guidelines saying that the IRS is going to tax you for your PPP loan. Because if they did, they'd have to go in there and break it down and say, well, those were wages and that's money we gave you, this, that. I don't know. I don't know what if they're going to tax you, but I do feel comfortable in saying they're not going to allow you to deduct expenses that you covered in your PPP. Makes sense to me. I mean, I know they're greedy. They like to get their little fingers on everything.
So this is talking, I guess, about when working with lenders, how picky will they be on employees? So for example, if you use a payroll company to process payroll, you have some full-time, some part-time, even seasonal. When you pull a payroll report, they may come up as like fractions of employees. And then some are even paid a salary, so hours worked won't be available.
Right. That again, that's going to get into one of those deep ones, and that's one we're going to have to look at individually and stuff like that. There's no real quick answer to that. I do know that if you have a payroll company that's processing your payroll, it makes it a lot easier, because basically the employer just gives the payroll company the amount of money they need to cover the payroll, to pay their tax withholdings, to file their 941s, 943s. So that's an easy way of tracking the money. So it's easy to certify that money went there. When you're talking about seasonal and all that, you have to go into it. And I'm not just dodging the question, but in seasonal, do they work? For instance, I got a ski resort. They haven't been working this summer, really. Their season doesn't start till, I don't know, October, November. And then they work through February, March. So they respected a little bit at the end, and they got a little PP for that. So it depends on when your seasonal people were. And again, it's going to depend on when you file for your application. We give you the period of 24 weeks, which is almost 6 months. So somewhere in there, you should be able to get your staff back up to whatever they were. That's going to be one of those that they need to reach out and a little more explanation. And I think in that case, you're going to be looking at the 3508, the regular form. But you may be able to do the easy form if you didn't have any reduction in the wages and stuff. And you're right, it's going to get into that FTE. It's 40 hours based on the labor department. Does 2 20-hour employees count as one full-time employee? It's going to get complicated.
Okay. Let's see. I think that kind of wraps up the questions.
Um, there's a person that has their hands up, Frank.
Oh, okay.
You have to unmute him.
I'm looking for him here. If you'll type something in the chat, that would be the quickest way.
Yeah. Frank, can you hear me? Wave at me.
There I see.
I know. I had him there for a minute.
I do have one more question. In today's example, that had the 3,000 that couldn't be forgiven because it was an idle grant, and she's just asking, is that correct? That 3,000 will not be forgiven?
Currently today, yes. And the 3,000 idle that I put in my example today was based on my employees of having 3 employees, $1,000 each. And again, I go back to the fact that if my PPP is forgiven, it becomes a grant basically. And we, in no time in the past, doing all the disasters we've done since the 70s and all that, we can't duplicate benefits. And you receiving $1,000 for each employee to help pay for them or pay them is, you know, how do you keep that so separated that you'll, well, but 2 grants can't be for the same thing. I think some of the people even get grants to develop stuff can't get a grant from here and a grant from there to associate with it. So I don't know. Frank, we couldn't hear you when you were talking.
Okay.
Can you type something? Are you there? Okay.
Am I talking now? Okay.
Yes, you are.
Question relates to whether the owner of the company has to declare his income and expense during this period of time.
If you didn't declare it for the PP application, you only got it for your employees, then no, you do not.
So a person who has already received the loan, he never has to expose his balance sheet. Is that right?
Well, and Frank, there again, I mean, I'm sitting here thinking as you're saying that, the person that applied that has a business,
Right,
and he has a corporation, say he's got 20 employees working for him.
right.
He applied for his wages that he pays for the 20 employees, and that's all. Then I don't know why he'd need a balance sheet anyway, because all he's going to do is need to document the money being spent to the employees and for the expenses associated, which could be a copy of his lease agreement for his place of business, could be utility checks. I know a lot of things have changed, Frank, for us over the years, and a lot of people don't write checks no more. They just have money directly withdrawn from their bank account. So all you got to do is prove where that money went. And again, if that's all that that's all you're doing, or someone you know is doing, then he doesn't have to give a balance sheet. There's no tax returns required. They're not asking for that. They are asking in some cases for a 941, 943, but that has nothing to do with your balance sheet or your personal statements. You won't have to give any of that.
Okay, so just as a possibility, a company owner could actually have as much income in the business during this period of time as he had before. So essentially, he's going to essentially just get the benefit of the salary payment, but his income is he's going to be doubled. Is that right?
No, Frank, can't work that way. We're not here to make a windfall profit for some owner to make off like a bandit because we gave him a PPP loan. Again, I'm saying if he didn't include his income when he got the PPP, which happened in a lot of partnerships forgot to add their money that they received. If he added his income and he got his PPP, he has to address his income. Now, he can't just go out there and suck hundreds of thousands of dollars off and put in his pocket and go, well, I make profit now because I didn't have to pay, I didn't claim myself.
Right.
You know, first of all, why didn't he claim himself would be the question I'd be if the lender should ask him at the time of the application. And we didn't do this for a windfall profit. So that would be one I would watch.
The second part that I have an interest in is in a little different field, and that is in people who have rentals, and during this period of time, their people that they rent to lose their job. They don't have income. They can't make payments for the rent. The person who owns the property maybe not able, as a result, to make his mortgage payments. Is there any evidence that some relief on this is going to come about?
No, sir. No, sir, because you're an investor. Some people lost money in the stock market. I mean, you're an investor when you have rent property. So we're not going to cover you for investments. I'd say the people that lost a job, as far as I'm aware of in Missouri, is if you lost your job due to COVID, you got to start drawing unemployment. And they're back at the beginning, they were giving extra money for them. So they should be able to have the money. But in that case, Frank, I don't know of anything you can do. Maybe there's some state money or something like that to help out people. But as far as we're concerned, the SBA, you're an investor, and we can't help you out because that's only impacting your investment and making you money.
All right. So Mike, thank you so much for that presentation and helping us walk through some of those questions. If you do have additional questions that we didn't answer, or maybe they were a little bit detailed, I tried to message some of you and give you my email address, but I'm going to throw that in the chat now as well. Know that also, like I mentioned in the beginning, you're always welcome to reach out to us via our website and schedule an appointment with us, so we can kind of walk through your specific, examples, situations, and try to get you some answers. If we don't know the answers, then we'll tell you that, and we will connect with Mike and our other representatives at the SBA, and we'll try to get you the answers that you need. So connect with us. I've put our survey link in the chat, so please take that. You don't have to use it out of the chat, just wanted to post it if you needed it, but know that you'll get a follow-up email with that information. Again, we're recording this, so we'll follow up and make sure you know where that is if you need to look at it again. And give us a call or an email if you need anything. You can email us at sbdc@missouristate.edu, and our website is sbdc.missouristate.edu. So get a hold of us if there's anything we can help you with. Thank you so much. And Mike, Carolina, thank you very much for your time. Appreciate you.
Thank y'all. Everybody have a good day.